We are live. Okay. Are we live? Yes, we are. Okay. So today is going to be interesting because we're going to look up, we're going to learn about two things, arbitrage and trading charts or trading views light charts. And I'll show you exactly what that is. But basically, to make a really long story short, there's a lot of different types of arbitrage strategy. And what arbitrage is just this moment in time where there's an opportunity and then it goes away really quickly. That's basically arbitrage. In trading, in the context of trading, what that is, for example, I'll explain latency arbitrage, which is not what we're going to be doing today or ever, because it's how you get banned and blacklisted. It's when there are two brokers, both of which have to get quotas for whatever currency or whatever instrument they're providing, and one of them has latency. Well, both of them have latency technically, but one of them has more latency. And so what you see, if you put both brokers side by side and you check their charts, is one of the charts of the exact same instrument goes up really quickly. And that moment when this other one, which has latency, didn't go up, the arbitrage is basically that difference. And you can enter really quickly. And with a very high degree of certainty, you basically game the system. Now it goes up, the second one. So you buy really quick and then exit and you just make infinite money. This is a legit strategy that will get you banned because you're basically stealing from the broker that does have latency. And when a broker finds out, because it's easy to tell, you're just entering at the perfect time every single time, they just ban you. Kind of like a casino. Like if you think about it, like you win in a casino, you must have some sort of an edge, even though technically you don't. They ban you. They want to make money. So that's not the only type of arbitrage, and that's definitely not the type of arbitrage you want to do if you actually want to have a sustainable career. No, I don't do prop firms. I just have one broker, and that broker is an A-book broker, and that's very important. But I'm not like fundamentally opposed to prop firms. But there is a conflict of interest a lot of times with prop firms. That being said, what are the types of arbitrage? Because I see so many videos of different people talking about arbitrage. Now, one person in particular, like this is an old person, Edward Thorpe, did statistical arbitrage on stocks, and this dude made it. Like I Google his net worth, it's like 800 million. I don't know if you can really trust those things, but for sure, you can definitely say he's a pioneer when it comes to this. He was doing it a really long time ago. Now, especially as the world becomes so much more connected, there's probably more opportunities. You know who's another person who did arbitrage and made it really big? What's his name? Sam, the Friedman guy. He did it with crypto, because when crypto was a big deal, while it was becoming more popular, he realized that one of the crypto brokers is pricing a currency different than another, and he basically did that. He did that arbitrage. Now, where does lightweight charts, the TradingView lightweight charts, fold into all of this? Well, here, let me just actually show you, as opposed to just telling you. So this over here is lightweight charts, and it's just code for charts. They just give it to you. I believe it's actually TradingView, so they're just letting you open source have all of their charting. So I'll show you what I mean by that. So this is kind of like a component if you look for code, and there's different types of charts, and that code is just there for free, and then you can use it however you want. White space, infinite history. I don't even know what all these are. Long story short, heat maps. There's even heat maps. That's kind of cool. That's actually really cool. Probably could be used for like volume and stuff like that. Long story short, if you can create your own charts, and then you can visualize the tick data in a different way, it can really help with creating an algorithm as you're ideating, as you're coming up with the idea, to say, this is the rule. Once this happens, do this, right? And one of the things that I'll be thinking of as I ask all the questions about arbitrage, because that's what we're doing in this session, is I will be thinking about what is called a tick chart from this book. Okay, well, it's not directly from, it's not like this guy, Bob Vollman, invented it, but he uses it in his scalping. This is a pretty old book. And I noticed from reading the book that the charts look very clean. Okay. And so I'm thinking, let's use this code to do the tick charts, which are basically a new candle gets formed not when there's a new minute. A new candle gets formed when a set number of ticks happen. So you can set it to like 70 ticks. After every 70 ticks, next candle. Now, if you take two currencies or instruments, whatever you're applying the arbitrage to, and you apply the same logic where when a new tick happens, consider it like a tick for the next one, then you're going to get very, very clear separations, spread basically between currency 1 and currency 2, or instrument 1 and instrument 2. So those are all the questions that I have that I want to ask about. And that's basically what we are going to discover today. So if you're watching this as like a video, that's the context. If you're watching this as a live stream and say you just joined, I guess ask me questions. I'll try to be able to repeat myself without getting too carried away. But let's begin. First, I'm gonna ask this. Wrong zoom button. Quick. What are the new possibilities when it comes to arbitrage strategies? Specifically, using something like trading views, lightweight charts, and multi-broker coordinated high. Now you got prime, HTN, JSON. Well, let me just finish this one prompt. And multi-broker coordination. Apart from latency arbitrage, what's possible? Provide a list. A list like statistical arbitrage and how that works, among others. I don't even know the different types of arbitrage. Okay. All right, that's pretty much it. That's the prompt. We'll read it out and we'll see what happens. Let's see. I just got in no idea what you're talking about, but I will just watch for a while to see if it is interesting. All right, so basically, to make a really long story short, there's different types of arbitrage. One of them is latency arbitrage, which you should never do, which is when there's two brokers, okay? And the two I'm repeating, but it's okay, I'll be quick. There's two brokers. They're quoting the instrument at different prices. And we're not doing this, by the way. And then what happens is one of them, the price moves really fast, the other one does not. You enter really quick because you know with a really high degree of certainty that it's going to go up really quick and you make money. They blacklist you and ban you because they're losing money, the broker, if you do that, because they have latency. That's not the only type of arbitrage. There are all sorts of different types of arbitrage. like statistical arbitrage. One of them, for example, is Australian dollar and New Zealand dollar. Those two economies are so connected that when the bigger one, Australia, because New Zealand, if you look at the map, this is Australia, an island. This is New Zealand over here. And their trade is so connected, New Zealand is almost entirely dependent. I don't know if you can say that, but for all intensive purposes, entirely dependent on Australia. And then when Australia makes a big choice in policy, whether it's like financial kind of policies, monetary policy, fiscal policy, like basically printing a bunch of money or unprinting, right? They can just take money out, or they change the interest rates. The big one, the big country. The small one just kind of has to fold. They just go with whatever happens. And so you see Australia leading, and then you see New Zealand following. That's arbitrage. That's a moment where you see, okay, maybe we could see that as an indicator. There's something called co-integration, which is like the next level of correlation, we'll call it, where you actually measure how correlated those assets are. And I'll give you like something that's perfectly co-integrated. My fingers. Check this out. Okay, the math is kind of difficult, but pretty easy. So there's 4 over here. Trust me, this is going to make a lot of sense. And there's 5 over here. And these two instruments, hand 1 and hand 2, are perfectly co-integrated. When this hand decreases in numbers, now we got 4, this one decreases in numbers, now it's 3. -1 for both. And then this one decreases, this one also decreases, -1 again, because it's a new move for both. This one increases, and then this one increases, right? They're different numbers. This is number 4, and this is number 3, but these are perfectly co-integrated. They're not just correlated. Correlated means they move together, kind of. This is co-integration. And that's how you measure correlation, and that's how you determine whether or not it's possible to do arbitrage and the different types of arbitrage. Edward Thorpe was the guy who did all this, and he did it a long time ago. He did it with stocks. I'm curious, what else is there in terms of arbitrage? What are the instruments that have this kind of relationship? And how can you take advantage of this? All right. That's pretty much what we're doing. Interesting. Nice. I'm glad you think it's interesting. I think it is too. I think it's very confusing. And I'm going to be very confused, I'll be honest with you, moving forward. Because I also want to fold this in. This book which I read. Hefty book. I didn't read the second one. But I'm gonna, one day. Also a hefty book. Second one doesn't have what I'm talking about, but tick charts. Tick charts are unlike regular candlestick charts, which, every minute, for example, if you set it to 1 minute, the new candle begins. It gets set based on how many ticks occurred. So 70 ticks, next candle. 70 ticks, next candle. And it just gives you a little bit more depth, and especially when it comes to using indicators like moving averages, whatever lagging indicator. It just kind of reframes the data, and I'm thinking maybe this could be used in here somehow. I'm in the idea phase. I don't even know, to be honest with you, where I'm going to go. I just know the general direction. Where are you from? I'm from Kuwait. Kuwait. If you don't know, that's like in the Gulf. I guess you know, because now the geopolitics is kind of crazy. But yeah, that's where I'm from. All right, let's see what this said. I wonder how many types of arbitrage and which ones are possible, especially now that you don't have to do all the coding and programming stuff yourself. Statistical arbitrage is the first one. This is the one I'm familiar with. I've tried many times, with specifically Australia and New Zealand. It's kind of promising, but it was a little difficult. Pairs, baskets, okay. Triangular arbitrage. Within one broker's FX quote, okay, EUR-USD and USD-JPY versus EUR-JPY. If the implied cross diverges from the quoted cross beyond costs, trade the loop. Okay, that sounds like gibberish, but it's not. It's basically, if you look at the pattern here, euro, dollar, okay, dollar and Japanese yen. You take the two that aren't together, the euro and the Japanese yen, and you make them together. And so you can triangulate and basically determine, okay, somehow with some math that's beyond me, determine, okay, this is the mispricing that's taking place. I'm Tunisian, bro, but I live in Spain now. Nice. I want to go to Spain. I went one time when I was young to Gran Canaria, the island, and I did surfing. I surfed over there and it was fun. I want to go back one day. Okay. Let's see what the next one is. Cross broker spread quote arbitrage, not latency. It knows it. I just spent a bunch of time in the beginning in this intro, and I was just saying, look, I'm not talking about latency because I know that it'll blacklist you and everything. It knows. It also knows. It's like, not latency. Calm down. I'm not trying to get you in trouble. All right, let's see what this is. I've never heard of this one. I heard of the other two, statistical arbitrage and triangular arbitrage. But what is this? Cross broker spread / quota arbitrage. So are you looking for arbitrage in like the spread? Or like the swaps? I don't know. Let's read it and let's find out. Persistent structural pricing differences, not speed races. One broker's swap rates. That actually makes sense. I didn't even think about that. If you go and you check what the swap is. One broker's swap rates, spreads, or index pricing, example CFD versus future basis. Okay. Systemically differ. Interesting. Interesting. So basically, both of those are derivatives. I understand it, but let me read the rest and then I'll explain what my understanding is. And if anyone understands it differently, please tell me. Don't just let me be wrong, okay? Long at the cheap broker. That's what it said. Long at the cheap broker. Short at the expensive one. Harvest the carry basis rather than fleeting tick. Okay, so this is my understanding. You can basically look for the mispricing, or not necessarily the mispricing, the difference in pricing. They, like this one broker A, genuinely, because of their system, the type of derivative that they're offering. So there's the main stock, call it Tesla, whatever it is, but that's not the only thing that's being traded, the actual stock. As a matter of fact, most people who are not in America are never actually buying the stock. They're buying a derivative product. And what that means is somebody goes and says, listen, I will give you a contract for difference. In other words, it'll be exactly like you actually bought the stock, even though you didn't. There's another, and then you can do leverage, you can do a bunch of things. There's another type, which is like futures. Futures is also a derivative. It's like we're betting that something's going to happen in the future with this, and then this is the contract for it. It's also a contract. Now, both of those are going to have different swaps because the broker kind of sets those things. And even if it's the liquidity provider, so if it's the person that the broker is dealing with to get this product, there's still differences. And this is saying, check what those swaps are and play with that. Some brokers, for example, is it halal? It's debatable. It's debatable. To be on the safe side, don't do it. I don't think I would do this. But it's actually debatable. And the reason I say that is because anytime you're buying a, not necessarily a derivative product, anytime you're buying a derivative product that is not actually touching the market, that's why I only use A-book brokers, you're basically gambling. It's like a full-blown bet. It's like if something's happening and then me and you have absolutely nothing to do with it, and I say to you, I bet you this, that's going to happen. I'm not producing anything, right? I'm not helping anyone do anything. With actually putting your money in the market, like actually buying real currency, even if it's highly leveraged. In other words, even if you're borrowing a bunch of money, that's what leverage is, to place that trade, you're still technically supporting the currency, especially if you're doing mean reversion. In other words, you have this currency, it goes up really high, really high, really high, inflation, whatever it is. That's not good for the people who use the currency for money. You go in and you say, I want to make money off this. I'm going to sell. You go in with real money, you borrowed, you did whatever. Now what happens when you sell? You push the currency down. You and like all other people, you're not going to do it yourself. It's too big a market. Okay, you technically did something useful for society, and that's why it's like it's a good thing. Same is true in the inverse. It goes down, it goes down, it goes down. The currency is cheap now. So what do you do? Because you want to make money, right? You buy, and then now it goes up. You and everyone else. And so what's happening is the currency goes like this, it's stabilized, and then people benefit from it. But you go and you buy a derivative product, something that doesn't even touch the market, a B-book broker. That's what they're called. They go and they just tell you, listen, well, this is what we're going to do. We're going to pretend like you actually are exposed. You have real exposure to this currency. We give you this contract, okay, as if you're in there. And whatever happens, we pay you, okay? And then this is the funny thing. So many of these B-book brokers, and this is haram, by the way. So many of these B-book brokers will literally have Islamic account, like Islamic, okay? And they just remove swaps because, interest is usury, and usury is riba, okay? That's like a haram thing. And then like a bunch of people will just say, okay, but it's worse, it's gambling. You know what I mean? There's usury, interest, and riba and stuff. And yes, you did technically remove it, but you're gambling. It's like saying, okay, I'm going to go to the casino, but I don't do interest, even though it's the new game that was created in the casino. And honestly, even riba, like that's something that I'm a little like usury. I think that's debatable of what is and what isn't. So there's a lot of debate, we'll call it. Long story short, just go with an A-book broker. Not just because halal, haram, and that sort of thing, but because there's no conflict of interest. If you're with an A-book broker and you make money, they make money because they're taking commissions from you every time you place a trade. They want you to win. Actually, my broker, after Prime, because they're an A-book broker, they stopped allowing just anyone to join. You'll know the difference when there's an A-book broker. It's not easy to sign up with them. You don't just click a button and then you get spammed with, we don't need anything from you, send your money. The B-book broker, immediately, as soon as you go on their website, they just tell you immediately, like, go, oh, Javon from Bahamas. I told you about my YouTube. That's right. Hi, Javon. All this is confusing me. I'm sorry. Just do this. Go with the A-book broker. Trust me. Whatever you do, stay away from B-book brokers, even if it's inconvenient. What's good, my brother? Not much. Or everything's good. But like, yeah. So I'm nice. I'm just learning about arbitrage, like different types of arbitrage. Stuff that's a little complicated for me, but I'm gonna try to figure it out in public, live. And yeah, the only reason I was talking about all the haram halal stuff is because I got asked and I happen to know about it. So, all right, let's go back to this. I'll learn by little by little. Nice. So will I. Okay. Let's check this. I like this swap carry arbitrage logic or the rationale behind it. Not sure if I would go with it, but it makes sense. It makes sense, like from a pure logic and rationale perspective. Okay. Index ETF versus constituents. Dispersion. What does that even mean? Index ETF. Okay, indexes and ETF. So an index and any exchange traded fund is basically just a basket of stocks. What that means is they get a bunch of companies, they find the average of the value of all the companies. And so it's kind of like you're buying at the same time 500 companies in the S&P 500 at the same time. If all of them go up, or some of them go up, some of them go down, but in general, the average goes up, you make money. But what is the arbitrage? That's the weird part. Trade an index CFD against a weighted basket of its constituents when the basket implied value diverges. Oh, that's smart. Mean reverting by construction needs a broker offering both legs cheaply. I think I get it. I think I get it. So this is what it's saying. This is from my perspective, what I understand. So there are already, this is definitely only possible because of AI now. Or not only possible, but a lot easier and more accessible to people. Okay, so there's S&P 500, which is like 500 companies, all of which have a moving, like dynamic price. Okay, Tesla is one of them, and I don't know, GM and all of these different companies, Google. Okay, all of them have their own movements, but then the way that the exchange traded fund, or the I should say the ETF, gets combined and gets given to everyone probably has some sort of a lag. They don't just immediately know from every single company exactly what the price is always. It's slow. Like it's not perfect. What it's saying is go and manually do the same thing that these indexes do, and then just buy all of those different companies, and then look for that mispricing. That seems like a really good idea. How much money do you need for that, though? That's where it gets a little difficult. So you'd need to find a broker that lets you buy tiny, tiny pieces. Like Robinhood, for example, is one of those brokers. That's my understanding of it. Very interesting. Very interesting. Not sure if it's actually possible for me with my amount of capital. Like I'm going probably with $2,000 max. But we'll see. We'll see. We'll look into everything. Wrong zoom button. Okay. Calendar basis arbitrage. Spot CFD versus futures on the same underlying. Okay, gold spot versus GC. I don't know what that is. DAX cash versus FDA. Excuse me. FDAX. That made no sense to me. The basis should equal carry when it drifts. Trade the convergence. Multi-broker, because few brokers offer both sides. Well, calendar basis arbitrage. That doesn't make any sense. Wait. Spot CFD versus futures on the same underlying. Isn't that basically... No, it's not statistical arbitrage because it's the exact same underlying asset. I see. I see. So basically, you can get like gold, or you can get gold futures. If you can get the same amount of leverage, then they should move the same. I get it. That's actually a viable strategy. But I don't know. All right, let's see what the next one is. Volatility / event arbitrage around rollovers, fixing 4 p.m. London and divergence adjustment. Brokers apply adjustment at slightly different times / amounts. Hedged positions across brokers capture the adjustment differential. Related is weekly gap hedging, where one broker price Sunday open risk differently. Okay, so this is basically saying there's gonna be... That's a really nice one. I will go now. See you, bro. Go. thank you for stopping by. Thank you. And also thank you for commenting and engaging. Have fun, do whatever you're doing. You got this. Thank you again. Okay. Bye. What was I saying? Oh yeah, volatility. This is an interesting one. This is one that I'm thinking is kind of perfect as an arbitrage thing that meshes perfectly, by the way, with this fact that you can take two different quotas from two different MT5 instances, you could say, running both on a VPS, get them onto your same one computer, use the trading charts thing that I showed you before, and see them both, and then see that divergence, which basically divergence is fancy for they went like this. They went away from each other. That's divergence. Convergence means they came together. Divergence means they went away. Volatility is probably going to introduce some divergence for whatever reason. And then at the openings, when everyone comes in and everyone's orders get filled, and because of the stock exchanges when they open and close, there may be some opportunity. One thing I am worried about is spread, because I tried this a long time ago. I tried the saddle trade. Everyone tries it. Everyone who goes into trading doesn't know that that's what it's called, but tries it. It's when you go and you see, oh wow, always the New York opens, and then all of these different instruments at the same time just go either up or down. Easy risk to reward ratio, 5 to 1 every day, and just put it really close, and then that one winner is going to compensate for all the losers. But what ends up happening is it's not just like the actual quota doesn't just go up, the spread, like the bid and ask price split, and so you're down here still, even though price is up here, and then it comes back down really quickly, and then you just get knocked out. It's called the whipsaw. Yeah, it's called whipsaw, and so you discover very quickly that it's not that easy. But if you hedge, what if you're doing that with two different brokers, one with a buy, one with a sell, okay? And what if it's timed? In other words, like you do this entry, but then there's a condition. The other one has to get filled as well before you can enter. Lots of stuff. I'm still just thinking it through. I don't know, just thinking out loud. But this is an interesting type of arbitrage, and it is more only possible now for someone like me who's not gonna manually code everything. Okay. There's one more. Funding rate arbitrage. Crypto. Long spot at one venue. Short the perpetual. What? Long spot at one venue. Short the perpetual at another. Collect the funding rate. The cleanest real retail arb today. I don't even understand it. What do you mean? Entirely a multi-venue coordination problem. Why is this the cleanest one and simultaneously the only one that didn't make sense at all to me? What is the funding rate even? All right, let me just so I don't forget, write this down over here. I'm gonna write down explain number 8 to me like I'm 5. No, I'm not gonna be on do that. Without too much jargon, define, and I'm gonna put that term, funding rate. Yeah, define funding rate, because that is a term I'm unfamiliar with. All right, let's read the next part. So this is where lightweight charts fold into this, and we've already discussed what lightweight charts is. It's just a place where you can get charting code easy, and then you don't have to worry about getting Fable to do the chart nicely. It just does it. It's a display only, no data analytics, but it's ideal as the monitoring cockpit plot the synthetic spread series. Yeah, that's basically what I'm saying, is you can see everything. Now, I did say at one point that it could give you a little bit of an advantage because you can calculate things more if you see both at the same time on the same chart. Let's see if that is true. Broker A bid minus broker B ask Z-score basis / funding as its own instrument with threshold price lines. What? Okay. So you watch the edge itself rather than the underlying charts. Yes. But you can do that anyway with MT5. That's the thing. Without this. The actual detection, I'll explain what I mean. The actual detection / execution lives in your feed aggregation layer. Cool. The chart is where a human supervises entries, hedges, and convergence. Okay. So I'll explain what it's saying, and that's not really a true... That's not an advantage. It's just saying where it fits. So what it's saying is when you want to, like I gave you that example before, in the beginning, I said co-integration, right? This one starts with 5, this one starts with 4, perfectly co-integrated. Mine, they're different. This one's 4, this one's 5. Both of them go down by 1. Now this is 4 and this is 3. Both of them went down by 1. Very strong, perfect relationship. Okay, and then this one goes down again, this one goes down, 3, 2, still different instruments, very strong relationship. That -1 can be charted, it can be plotted. You can plot -1, and then -1, and then -1. And that's really what you want to trade when it comes to arbitrage. You want to find those situations. That's basically you're creating a new chart that is the spread that is in between those two instruments. And it's saying TradingView can do that for you. And I'm saying you can just get away with that with MT5. You can create a new chart on top of the chart on MT5. I've done that. You can create Minecraft. I'm sure you can. I've said this before. I haven't done it. But you can basically create Minecraft on MT5. I'm telling you. Because it's code. You can do anything. That's how code works. Okay. Let's see what this super clean arbitrage is that it's telling me is the cleanest. Let me move this down so you guys have a good view. The setup. In crypto, there are 2 ways to hold Bitcoin. You can buy the actual coin, the spot, or you can trade a perpetual contract, perp. A bet on Bitcoin's actual price that never expires. Perp, like perpetuity, I guess, or not perpetuity, perpetual, or maybe they come from the. Basically, it's a contract. It's not the actual Bitcoin. Perps are popular because they let people use leverage. Wow, this is basically the equivalent of regular currencies derivatives, but now there's derivatives of the cryptocurrencies, and they're called perp. I did not know that. What is the funding rate? That's basically what that is. What is the funding rate? The mechanism that fixes that every 8 hours, typically, the exchange makes one side of the perp market pay the other side a smaller fee. So they're offered by exchanges, okay? If the perp is trading above the real price, too many people betting up, the longs pay the shorts. So it's basically swap, but now there's swap on derivative assets of cryptocurrency, which is unregulated. That is very risky. Yeah. Yeah, I'm not too sure I want to do crypto stuff. Okay, so the only one that really caught my attention, I think is perfect for me, is the volatility or event arbitrage. And part of the reason for this is because I already tried something with a calendar EA. I tried this before. It's difficult to backtest. So it's very difficult to find actual information, people who succeeded at it. And at the same time, it just kind of makes sense. It's very logical. I'll show you what I mean. I'm going to open my MT5 and I'll show you the calendar and I'll show you what those events are and how they're built in to MT5. You can click a button called calendar and then you can see the high impact news. And then when the high impact news happens, more often than not, depending on the news type, you'll see like a big jump in the currency. Now, what it's saying is that every broker will handle volatility a little differently. And this is kind of like the latency arbitrage thing, but it's doing it on like a long, because it says around rollovers. Wait, is this just latency arbitrage? Let me ask just to make sure. Because even if it's not and it's seen as latency arbitrage, volatility / event arbitrage isn't, I'll say, isn't, oh, volatility / event arbitrage basically just latency arbitrage. I'm also going to say, if it's not, wouldn't it just be perceived as such? Wouldn't it not just be perceived as such? All right, let's see what this says. Good challenge. Good challenge. They're mechanically different, but your second instinct is right about perception. That's just Claude deciding to glaze me because it likes me. It says, ooh, good instinct. You have a really good instinct. Thank you. I know. Okay. Why it's not latency arb. If this is a good enough argument that I can make to my broker, then it's worth digging into. Latency arbitrage is a speed race. Broker A's feed updates a few milliseconds before broker B's. You see the future price on A and pick off B's stale quota before it refreshes. The edge is speed without being faster than the slow broker's feed. There's no trade. Okay. Event arbitrage needs no speed at all. The events are scheduled and known in advance. Okay. You know the London fix is at 4 p.m. Let me go away from the super zoom so I don't get dizzy. Event arbitrage needs no speed at all. The events are scheduled, basically. You know the dividend adjustment on an index CFD happens tonight. And so basically what it's saying, you know that the big news about this, whatever it is, happens tonight at this specific time. And you know rollover is 5 p.m. New York. What is rollover exactly? I think I know, but I may be wrong. The edge is the broker A and broker B apply their adjustments by different amounts or at different moments per their own published policies. Your position minutes or hours before the event hedged across both brokers and collect the differential when the adjustment lands. Oh, a trade you entered 45 minutes earlier with market. Okay, so okay, I think I get it. It's saying that there's actually just a difference with the actual quotas of the different brokers, and that difference that they have gets kind of reset when there's a lot of volatility and rollover. Rollover actually has two related meanings. One, the relevant to the earlier discussion, is the FX one, so I'll start there. FX rollover, the daily one. When you buy a currency pair at a retail broker, you never actually take delivery of the currency, but the underlying market convention is that FX trade settle deliver. Okay, I think 2 days after the trade. So it doesn't apply until, like, it doesn't apply immediately. I didn't know that. Since you're holding a position that should settle, your broker quietly closes and reopens it every day, pushing the settlement date forward by 1 day forever. So kind of what my understanding is the way that the mechanics work of the market, particularly on the broker's side, has to kind of mediate between the liquidity provider and you. In other words, they're just there, the broker between everyone, is they have to close trades, but then for you, they don't close it, even though they have to. And so they close it in the back end, but for you, just nothing happened. It's kind of what my understanding is. It's a bit reductive, but for all intensive purposes, I think it works. I think. If someone's watching this as a video, not even as a live stream, and you know I'm wrong, leave a comment. Tell me how I'm wrong. Don't worry, I won't get offended. But I think I'm right. I think I get the gist of it. Okay, the push isn't free because holding two currencies overnight involves interest. If you're long GBP JPY, you effectively hold pounds, which earn UK interest, and owe yen, which costs Japanese interest. The difference between those two rates, plus the broker's markup, is the swap, a small credit or debit applied to your position at each rollover. That's the number from your own after primes data. Long GBP earns plus 4.17. Short pays minus $18. Okay. So this is basically like rollover arbitrage, I think. Two quirks that matter. Triple swap. Yeah, I think after prime applies triple swap, like on 1 day or something. Quick. If I win like this using the rollover, does the broker lose similar to how they would when it comes to latency arbitrage? Because if there's a conflict of interest, like, this plan just kind of dies. Mostly yes. And that's exactly why they care. Swaps aren't a pass-through to some external market. The broker sets them. The underlying interest rate differential comes from the market, but the broker adds a markup on both sides. Okay, so basically this is a way where it's not speed like latency, but basically you take advantage of the fact that the broker has to pay interest. And what do? You just kind of game two brokers, and because you see that they have different amounts that they have to pay in terms of interest. That's my understanding of it, and it just doesn't work because then they'll get upset with you. The difference from latency arb is size and speed. Latency arbitrager bleeds a broker fast and visibly. A swap harvest bleeds slowly and looks like a patient position trader that buys you a much longer life before the risk desk notices. There's basically a desk in every broker, is what it's saying, that goes and looks for people who do this. But the usual endings are the same. They cut that pair's swap, reclassify your account to worse swap terms, or invoke the arbitrage clause. Yeah, so that's less bad than what I was saying. I said they'll blacklist you and ban you and throw you away. They won't do that. They'll just do everything else. All right, this is what I'm going to say. I'm going to say these sorts of strategies simply will not do. Suggest, I'm going to put also in brackets, the ones where, the ones that a risk broker, what's the opposite of compliance? Non-compliance. Non-compliance, fine, that works. Give me a list of only feasible long-term arbitrage strategies that are relatively new, made possible due to the proliferation of retail trade of, I want to say broker of it becoming accessible. Of okay, accessibility of immediate data and trading and retail trading. I'll just say immediate data. I want to say also the fact, in addition to everyone can get the data, like everyone can actually trade it, but I don't think that's important. I'll just say immediate data. Yeah, so I'm basically, this is what I'm thinking. I'm thinking there's probably going to be some opportunities, arbitrage opportunities, which just like 1 decade ago did not exist, but then a bunch of the stuff on the internet about what arbitrage is from a decade ago. And so now new things exist, and I'm trying to find those sorts of new things, and hopefully we find one that's worth really looking into and digging deep. The difficult thing about this is very difficult to backtest, but we'll find a way. We'll find a way. If we find one that actually works. Filtering hard for that, the strategy must be one where the venue doesn't mind losing, either because you're trading against other participants, not the house, yes, or the venue explicitly profits from your activity. That rules out everything that drains a retail FX broker. What's left is genuinely enabled by cheap real-time data feeds, and all of it is tolerated indefinitely. Yeah, statistical arbitrage. That's the number one. It's just really difficult. Hello, hi Lego Geek. What's up? Thanks for clicking on my video or my stream. We're learning about arbitrage strategies. I'm looking for an arbitrage strategy that is not latency arbitrage. Now, if you don't know what that means, let me know and I'll explain. If you do, then I'll just continue with what I'm doing. But it's very interesting stuff. and it's a lot easier now that you can just tell Fable to do it. Okay. Crypto funding rate harvesting. That's the same thing from before. Again, I don't know, a lot of the brokers with crypto are just kind of sketchy, especially if they give you leverage. I went on one broker, I don't know if it was Binance or if it was when they first came out, when Binance first came out and there were options, crypto.com or something. And then I checked the leverage and it was 3,000 to 1 leverage. It doesn't matter what position you take. With 3,000 to 1 leverage, the moment you enter, just a little move like this blows your account. You lose $1,000. Technically, they didn't scam you. Technically, because they told you that it's 3,000 to 1 leverage. But if you don't know about leverage and margin and those sorts of calculations, you just immediately lose. That's kind of a scam. Sure, what are you building? Like the same thing. Basically what I'm just researching. So I'm gonna explain latency arbitrage, and then I'm gonna tell you that there's different types of arbitrage. Latency arbitrage is when there's two brokers, both of them have different quotas. In other words, they see the instrument, whatever currency, stock, whatever it is, and then there's just a lag between when they get the new price that they offer to you to buy. So one goes up really quickly, this one still didn't go up because there's lag. You see that because you see both of them, and then you enter a buy over here really quick. Now, price is definitely going to go back up, or go up, not back up. You just made money every time infinitely. And then you get banned because the broker loses this way, because they're losing on the fact that they have lag. That's called arbitrage. Arbitrage is that difference when you have two different things and there's divergence. Divergence is when two things kind of split up, okay? There's divergence. And then there's convergence. That moment where you enter on the convergence, for example, is called arbitrage. Okay, what else is possible in terms of arbitrage? What can be arbitraged? That's what I'm asking, basically. And I'm learning. I still don't know exactly which direction I'm going to go with this. But I'm asking, like, what exists? Like, what are the options? And then for some reason, this is the reason, actually. This book, I really like this book. The way that it's written. Like, he'll say, just the way that it's written, to be honest with you. Like, not even the content. He'll say things like, a novice trader will make this mistake. But a seasoned, calm professional will wait, bide his time. And I read this, I'm like, okay, I bide my time. He uses the author, Bob Volman. This is Bob Volman. Uses tick charts. And now all of a sudden, I guess not all of a sudden, it's just kind of been there. But now what's accessible is open sourced charts. So you see all this stuff. Let me go to like one of the candlestick ones here. This code for this, you can just click this button, get this code, and then you get the chart, basically the exact same chart, and you can choose the different fonts. You can choose different styles. Let's see what this style is over here. Colors. I don't know what the difference between those are, but you can see that some of them have a lot of differences. See? Some of them are very interesting. This is the heat map one. Stacked area, interesting. Ooh. This is exactly the one that would be used for arbitrage. High-low close area. Yeah, this is exactly which should be used. Anyway, how do tick charts fold into all of this? How can we use this trading view code to build our own little platform, okay, to get the price for multiple brokers if we do arbitrage? That's the next step. That's what I'm gonna work on. In the meantime, I just need to research, to be honest with you. Like I'm not familiar enough with all of the options out there in terms of arbitrage, and that's what I'm doing today. I'm asking these sorts of questions about it, arbitrage. Okay, let's go back to this. So it told me basically that there's a bunch of options, and then I checked those options, and most of them were just not feasible. And then it gave me more because I told it they're not feasible. I don't want to be banned and blacklisted and those sorts of things. I want to stay away from crypto. Like I said, a lot of those brokers are sketchy. Prediction market arbitrage. The genuinely new one, Polymarket, Kalshi. Yeah, that's just straight up gambling. Not gonna do that, even though there is a real arbitrage opportunity there. DeFi arbitrage on chain. I think that's also kind of like crypto. This one might be feasible. So what I understand from it, just from skimming it, let me just make sure I'm right about price differences between automated markets, market makers, Uniswap, Curve, are corrected by arbitrageurs. What? Arbitrageur. Okay, this is like a noun. I don't even know what it is, but it's just it has something to do with arbitrage because we can see arbitra, arbitra, you know, and then gurs. Okay, by design. The accessibility tier is the speed race. Also, any bug reports or feature requests. No, no bug reports. You're talking about your fix map. Yeah, so I used it. I put it into this new thing that I built called Arena. This skill. And I went really far with this. Let me just actually show you. But basically what this Arena skill does, I don't think it shows very nicely, is to make a really long story short, it creates a little virtual computer inside my computer called Hyper-VM, which just comes, by the way, with Windows 10. So if you have Windows 10, you can do this. And that's completely isolated from my system. And then inside that area, what happens is I download, like I download whatever the repo, whatever thing that I downloaded into that sandboxed area, and then have program run through it and give me a report. Check for all of the security vulnerabilities, those sorts of things. Check for the capabilities, like what does this repo actually do, right? In other words, like a scammer probably with a scam repo is going to say this does this thing, and then like the code doesn't do anything. They're targeting weak people or smart, dumb people basically, who don't know. Like they just kind of download and go for it. That's the mindset of the scammer, I believe, right? And then basically they get you because you thought you were downloading this thing, you're downloading that thing. And then third, and that's where FixMap comes in, is it does like a checks like are there any bugs, are there any things that I should worry about. It's very cheap, deterministic, basically what you built. And so yeah, that's already all built into this Arena skill. It was a little difficult to build. I had to go into the BIOS and activate and enable things because it's at the kernel level, is what it said. Because you're basically actually having like a completely separate system inside of your system. Interesting stuff. Yeah. Okay. DeFi. Yeah, I don't know about this DeFi arbitrage thing. Hello. Hi, 404. We know what the 404 means, but we don't know what the J35 means. What does the J35 means? Assalamu alaikum. Wa alaikum salam wa rahmatullahi wa barakatuh. I'm building, or I'm not building right now. I'm not building anything. I'm just learning things because I want to build something amazing. I'm asking questions about arbitrage. J35 is a Chinese aircraft. Okay, I need to know which aircraft you think you are, because you called yourself this aircraft. J35 Chinese aircraft. Better be a good aircraft. Okay. Are you like a war buff? MashaAllah, akhi. Okay. Are you like a war buff? Do you like history and geopolitics? No, it's a good plane. Good plane. Honestly, they all look the same to me. Stealth. J35. I heard F35. J35 versus F35. I love geopolitics. Nice. When we start building, likes what's your timeline? Well, I'm probably going to build tonight like a preliminary version of this thing. So what do you call fixed map from that skill? Oh, it automatically just calls like it's inside of the skill, and it's not all of the features of fixed map. It stripped down the parts that I wanted, that I could use, and then just kind of built this arena thing. I think it put the whole thing in there and then just chooses things. When am I gonna build it? So here's the thing. I've built a lot of statistical arbitrage strategies before, and I always have the same thing, and or the same problem. So I always used AUD USD and NZD USD. And every time that I've built it, and I basically prompted GPT, this is like last year, I was telling it like, okay, we're doing this, get the notional value of, basically you enter 1.1 Australian dollar, and then you enter like 0.6 or 0.5, I forget the number. And then when they move together. And it worked. It worked so well that you just win more than you lose. But then there's something called drift. At some point in time, the notional value goes away, and then you just kind of watch yourself slowly drain. So you win 10 times in a row, and then slowly just you lose. And then you think that it'll come back because historically, like those 10 times that you won, it always comes back. But then what ends up happening is it just doesn't. And I haven't found an indicator or a solution to determine and find out whether or not it should or shouldn't come back. Yeah, basically to know that this is a time where you should cancel. Cool, I need to go by. Thank you for stopping by, Lego Geek. Goodbye. Take care. All right. You know what? Here's what I'm gonna do. Because it's difficult to just talk about this without showing everyone, and I have a lot of AUD USD data. So I want to visualize this for you right now. And regression to the mean. Yeah, Javon. Yeah. It's kind of like that. Look, you'll see exactly what I mean. Maybe set a mean number or range and build it into the software. Yeah, you love geopolitics, Akhi. Kind of. I mean, it's important. That's why I'm interested in it. Uh, and it's important also to economics, if you think about it, right? Like Brent and crude oil, by the way, literally perfect for this statistical arbitrage thing that I'm doing. So knowing what's happening with right now, all the stuff with oil, can be very useful. Anyway, let me show you this visualization, and then even that will make even more sense. So this is what I'm going to prompt. Let's use the trading view light charts code to visualize the AUD USD versus NZD USD data, putting them both on the same chart, getting accurate prices using my Lucas copy data. There should be a single anchor point, which is kind of like the area for notional value. And this means that the y-axis will have two separate ladders here, prices, just prices. Don't go too far. Yeah. Do this quickly. Oh. It didn't trigger my skill, but that's okay. I think it'll still work. I'll just leave it. Yeah, I think this will work because Fable is good enough, even if it's on low effort. Uh, yeah, so here's what you can expect to see. You can expect to see that these two currency pairs are basically going to split up and come back together. Like this. Like this. One of them is AUD, one of them is NZD. They just kind of move together. And if you enter a buy, or you enter a sell and a buy, so here, here. One of them is a buy, one of them is a sell. You make money no matter what, basically. I'll tell you why. Because and by the way, this sounds like it's just an infinite money glitch, but in practice, it's not easy. All right, so you did a sell on the top one and a buy on the bottom one, and then let's say price went up there instead of going down all the way down to here. I got my light here. It went up, okay? Plus 12, and then like minus 8. So you end up with money. Same is true if price had gone down. I'll show you. This is only true if they converged, by the way. In other words, they came together. And what that looks like is like this. They came at the same, like they crossed. Okay. If it went down, then the sell moved more than the buy and it went down, which means you're profitable, and it would look like this. Plus 12 minus 8. I'm using the same numbers because you see that the sell, you make money as it goes down, moved more than the buy, which you lost money on. So you lose 8, you gain 12 if it goes down because they were split up, diverged. But then they converged over here. If it goes up, same entry, then you lose on the sell 8, right? But then the buy moved more than the sell. And so it's plus 12. You had a much bigger move. That's basically statistical arbitrage, and on paper, it's just the most logical thing to do. But in practice, it's just ridiculous. Like it breaks your spirit because you just see 10 wins in a row and you just watch your money come back. And then one of them, for some reason, just doesn't come back. Then you see it come back, almost come back, and then it goes away. And it goes away slowly. And you just wait until the account is blown. So now that Fable exists, I'm going to get Fable to help me with that. And I'm not going to close my mind and say this is the only type of arbitrage, the statistical arbitrage. And this is the only two currency pairs, NZD and AUD, that I'm going to think about. I'll think about everything and we'll see what happens. That's basically the position that I'm in. We can probably actually use this once it's done. To help us think about things. Okay, so it says that there's aggregate AUD, USD tick data, and aggregate NZD, USD tick data to daily close. Hold on, let me stop these two. I'm gonna say don't, because it's important to have like the ticks. Don't aggregate the data. Use every single tick. Just do it for 2 weeks of data. Choose a recent, like 2026 period. 2 weeks. We'll populate the tick data later. Just build the working visualization now. It's kind of important to see every tick. You can't just do that without that. Have you ever tried local model? I mean, download whole open source model running on your own hardware. I did, and I have Olama over here. We got Olama. And it was really, really slow. I haven't tried when I got my new GPU, but yeah, it's just too slow. Doesn't make sense. But I guess as you get better at it, not better at it. Yeah, actually, as you get better at programming, you don't really need to delegate all the tasks to like a really powerful AI that can do all of the thinking for you, because you can do some of the thinking yourself, because you know that little things don't really need a lot of thinking. You can just, it's like the hybrid between automatic and manual, you know? So maybe soon it becomes possible. If you have good hardware, I think you can use a local model fine, tune it for your trading purpose. Yeah, for MQL5, yeah. What is your current hardware? I have nice hardware. Check this out. Task Manager. Two GPUs. Not one, but two TIs. The 3060 Ti, which is a really nice Ti, and then the 5060 Ti. And the reason they're the 60s, apart from, you know, cash money is not as easy to attain as I would like it to be, so I can get the 90s. Is because they have the power consumption is very low, right? So I have a PSU is 750 watts, and it powers them both very well. You can run local at such a good speed. I can. Oh, you have been selling a lot of oil. Yeah. And there's this, by the way, the onboard graphics on the motherboard. And this one, I don't know how much actually this one is. I don't think it's 16. Like, you don't have 16. So this is weird. I think this is the GPU 0 is wrong, because it's not 16. Otherwise, I would have like 16, 32. Like, yeah, I just put the hardware in, and I chose the correct power supply. And I told Fable, fix it, like install the drivers, do the stuff that needs to be done. And then it did. And at first it wasn't working. But then it did. Now what I need is HDD. I need terabytes. Lots and lots of terabytes. Because what I want to do, which is the same thing that a lot of, I'd say more of the successful streamers and YouTubers do, is they talk about trending topics. You know, trust me, you have so much VRAM on GPU. Try a good local model. I will. This is what a lot of trending YouTubers or successful YouTubers and streamers do. They'll talk about trending topics, and then they'll do a bunch of shorts. And they'll choose in the stream to talk about stuff that's actually popular. And then a video editor can come in later, clip those topics, okay? And then make those into shorts, and then the future people come because I'm talking about the things that are actually popular. So I built this app, which is connected to my YouTube. So these are all my videos. Like, I made those videos before. And I can choose shorts, live, and I can already see my lives. These are my lives, okay? And I can click on a, oh, I didn't know it'll show me live now. Yeah, I can click on one of those. So for example, I'll click on this one. Oh wait, wrong section. I need to click here, transcript. And then I click on this one. Oh, never mind. I didn't do those ones yet. Okay. And then it will break down for my video editor with good quantization and good split. I need to learn what those are so that I can... maybe that will increase the speed and then actually make it feasible. Okay. Yeah, so basically the video editor can now very easily, without having to watch the full live, just see the different topics of the things that I've talked about. This is one of the things that we were talking about before. The transpiler. We talked about fake symbol hacks. All of this is just for YouTube or for video editor to be able to download only the clips that are usable. And it's color coded very nicely. And then you can do this and then click the download button. There's like a download button over here. And then download only that section. And then make a clip. So you don't have to download 2 hours every day, right? So it just makes it super easy for clipping to happen. This is the power of AI, I'm not gonna lie. Yeah, that's where we are at. I don't know what got me talking about this. Lost my train of thought. Let's check if this actually got built. Aha! It actually did get built. Okay, so you can see it, right? You can see that correlation or co-integration. When you put the two charts on top of each other and try to make them fit, like see here, there's convergence and divergence, and I direct you to this area here. Now you can see what I'm talking about. See, like if it comes down and then here they cross, this is a moment of convergence, and then what happens? They diverge, and then they come back. And in my previous attempts, I was very good at this. Like I would enter, like over here, for example. I would enter a sell over here and a buy over here. They would come together around here and I would exit with money. Once, twice, 3 times, 4 times. Easy. Keeps happening. And then at one point, somewhere along, you know, what ends up happening is they just diverge. They diverge so much that you blow your account. Yeah, and as you move, hold on. As you move this around, like you'll see sometimes it jumps up and down and up and down. That's because of the drift. Because they're different, completely different. So you see how far away they got? And then they come back together? Oh, you can run new Minimax H3 video model on your GPU. Minimax H3. Okay, this is definitely worth digging a little deeper into. H3 video model. I know that there's the Kimi 3 is actually really good. It's just like it needs a trillion. It's a trillion parameter model. It needs a lot of GPU or RAM or something. What's this? Some of these Chinese models. I've been trying to use my GPU for things. What is accumulation, manipulation, distribution? I think this is my take. Okay, this is my perspective. I could be wrong. I just want to be very clear. When a really, really large institution wants to do a trade, just a trade, okay? Naturally, when they place their order, it doesn't just fill like that, okay? Because you're trying to come in with like $1 billion or whatever it is, and the people who are on the other side, so you want to buy, and there's a bunch of sellers, are selling you $1,000, and this is the people, like just regular people, retail traders, everyone. And so you pick up slowly. Okay, you pick up slowly. So now you're at a disadvantage if you want to get in here at $1 billion, because automatically you're pushing it up. You're pushing it up so much that by the time your billion got filled, you moved the price. You just moved it so much up, and now everyone's selling because you moved it up so much. So what do they have to do? These people who want to enter with $1 billion, they have to be a little strategic, and then they do these things: the accumulation, manipulation, distribution, where basically they try to deliberately enter after it comes down, they come back up. After it comes out, they come back up. They're not doing this on purpose to go hunt stop losses and get your money, but they are doing it to hunt stop losses just so they can fill their orders, if that makes sense. So once you understand that, then it kind of makes sense that there are these zones in the market that you want to do your best to respect sometimes, because the big institution that comes in will affect price a little different than how we would if we come in with like our $5. Okay. What's this? This is the Minimax thing. Interesting. Yeah. There's so many different ways to trade. It's like such a big world. That's why I really like this niche of trading. But then the problem is there's just so much misinformation. So many people will tell you this is exactly how you get rich. They'll tell you don't listen to anyone else, listen to only me. Buy my $8,000 course, but it's okay because just for you, I'm giving it to you for $800. Oh, you didn't make the money. I gave you the information. It's on you. But it's okay. You just need more training. I have a new course. It's $10,000, but check this out. Just for you, it's $250. There's so much of this that, the trading world can be a bit of a problem. But it's actually very interesting when you're legit about it, I think, and you genuinely care. And I have a degree in economics, by the way. Like, literally, like a degree. Economics and psychology. I like economics, and then trading naturally is one of the main things that can be used for. Oh, yeah. All right. Let me check this Minimax. I want to read about it because I'm very, very interested in video, camera, and lighting. Maybe even more than trading. SMU to the world. Yeah, Javon. By the way, 404. Javon was with me in Canada. All right, what is this? Omni model inputs. Understanding unified context, combining text prompts up to 9 reference images. Okay. Task versatility. Supports text to video, image to video. Okay, so that's just how you control it. That's FAL. That's FAL AI. I know FAL AI. Minimax H3 and Comfy UI locally. That's what you're talking about. Yeah, I don't want to use Gemini. Gemini is usually wrong more often than not. Tired of living with 2 GPUs? Buy my course for $10K. You will make billions in 1 month. Yeah. Basically, these 2 GPUs make it possible for me to be considered qualified for you to give me all your money. Hugging Face, Comfy org. Yeah, it is the Comfy UI. That was what you're talking about. I hear Hugging Face all the time, so it must be time to just download Hugging Face. I'm gonna keep this. I'm gonna save this as a visualizer for stat arb. And honestly, with what we've done today, what we've learned today about statistical arbitrage, about arbitrage in general, I feel like statistical arbitrage is still the one. I just didn't do a good job at it before. Hugging Face, no Hugging Face, it's like GitHub for models. Oh, it's not a thing you install. Let me check. Oh, wow. Hmm. Okay, here's what I want to know. I'm gonna ask, uh, how many models are on Hugging Face, like in total? Is it like open router level where there's like a couple hundred, or is it full blown like thousands of models? Anyone can just make a model and throw in their invention. How many um, models are available? How many models are open sourced on Hugging Face? Quick. You don't have to download Hugging Face. Instead, you download open source models from Hugging Face. These are all open source models that you can download. Must be a lot because many people take open source models, create their own distilled versions too. This is the game. This is the game. If I create my own distilled version of the model, then Rocket Chimp can really be fully just only provided by me. I can do training, I can do a bunch of stuff with it. Yeah. Like there is one model there's someone made combining Quen and Claude Fable Mythos together. But Fable is closed source. They didn't put it out. And the leak was not the actual model itself, right? It was only the like the not the parameters, sorry. The rules, like the system prompt for it, right? Because if I'm wrong about this, then the next play is basically just full-blown GPUs and run legit Mythos. Even if I have to wait 2 hours for a single prompt, it's fine. That is why I was saying you can take one model from there, you can fine-tune it to your trading data. You'll have trading AI model. See, that's the thing. What I would fine-tune it for is MQL5. I've already built a knowledge base for Rocket Chimp, Fable, basically, which actually does a really good job. I indexed and chunked. I basically set it up so that it can scrape through the documentation provided by MQL5 and a bunch of forums of people fixing things. So it knows bugs that people found. Like there's literally bugs in MT5 that MetaQuotes hasn't fixed yet, but then their support just will answer the question for people like, yeah, this is a bug, it's a known bug. So it knows all these things. It's very, very trained on MQL5, and I did it through knowledge base, RAG, basically. I wanted to have my own AI completely because then nobody can, copy it. It just becomes truly original. In the meantime, it's just a wrapper. Rocket Chimp is just a wrapper. Even though Fable is closed source, they ask multiple questions from Fable. Take the Fable applies as training data. Give it to Quen open source to train on. Does that actually work though? Because inherently, like the models, it's not just the training data that makes a model. Don't they have different layers, different features, different like even the base layer in a model? That's the vocabulary, right? That exists, and then those second layer, third layer, fourth layer get that's where the parameters come in. Let me know if I'm wrong. This is my understanding. That is how distillation. What is distillation? Wait. Oh, yo. I don't think you're ready for this. This is how many models there are. 3 million. When did people even start to have time? I did not know that there are 3 million LLMs that existed. I thought in total it's like, oh, there's a couple hundred, you know, with like 4 that are good that everyone uses. Only, you know, 3 million, that's crazy. You know what I think it is? It's not all large language models. There's different types of models. Hugging Face is probably much wider in terms of scope, like the image interpretation or generative, like image, video stuff. Probably some niche things that I'm not thinking of. That is why American companies say Chinese companies are distilled versions of American AI models. Base layer is set. You keep providing data to base layer to improve. Distillation attack. Basically, you run a bunch of questions, post stuff, and then instead of training your own, you just kind of steal that training, right? I never knew exactly how that works. I just knew that that's what that meant. How effective is it though? I'm gonna ask. Hopefully, I don't doesn't tell me, hey, no, you can't. It might. Let's see. For my rocket chimp, you have to ask in a good way. For my rocket chimp product, which is a RAG, I'm curious about how a custom model would do. How would I train a model, particularly by getting an existing model to behave in the way that I want it to? And I'm just gonna say, think of a distilled version of an existing great model, customized to meet my requirements. Yeah, I think that's vague enough that the word distillation attack wouldn't even be brought up in terms of context. Base layer is set. You can, yes, it's effective, but has to be done a really large scale. Here, go through this entire article. Okay, I will go through this entire article. Best model to start with are Quen models. Okay. Meta, right? Okay, that's just YouTube. Detecting and preventing distillation attacks. Oh, very interesting. We have identified industrial scale campaigns by 3 AI laboratories, DeepSeek, Moonshot, and Minimax to illicitly extract Claude's capabilities to improve their own models. So they're saying that these 3 companies, these laboratories, are deliberately just stealing stuff from them, from Claude. These labs generated over 16 million exchanges with Claude through approximately 24,000 fraudulent accounts in violation of our terms of service and regional access restrictions. Okay. So this is called a distillation. Moonshot AI. Okay, there's only one way to really know if these distillation attacks are truly effective. And it's to just go to one of these competitor AIs and test them. Are they good or not? This is where T3 comes in. Because what is DeepSeek? Yeah, I'll test those things later and actually go through the entire article because I do want to read it. But in the meantime, let's just see what this is. This answer about distillation, so that when I go on with this, I actually have a little bit of a understanding. Kimi is #1 top model right now by Moonshot AI. I didn't know Moonshot made Kimi. I just knew that Kimi was super powerful. And the more you know. Our technique you're describing, distillation via fine-tuning. You don't train a model from scratch, that's millions. You take an open weight base model and teach it at your desired behavior with a few thousand examples pipeline. Pick a base model. For a RAG assistant, you want a strong instruction following and long context. Current good candidates and small but capable range is Quen 2.5. I'm pretty sure I have Quen. Wait, hold on. I'm gonna open Olama. New chat. Alright, this is what I have right now. Quen 4B. I think I deleted them. I downloaded one of them and then it just was too slow and then I deleted it. But I had like the smaller one. And I tried this a really long time ago to see if I wanted to do my own model. And then I went with RAG. It was just a smart thing to do. I told you, Quen, yeah. That's really outdated, Quen. Yeah, it's a really old one. That was a long time ago when I started building. And it's not even downloaded. Yeah. And then there's also yeah, it's also split up. Like I pulled some pieces out of it because I was moving stuff around. Is Olama the only place that you can go and use for open weight models? Like, is that the only way to do it? Or can you use T3 the same way that you can use Olama? Because I have T3 now, and I think this is the Theodore guy who made it. Yeah. Okay, let's read this. Pick a base model for a RAG assistant you want. Yeah, that's what I'm saying. Build a training data set. This is 90% of the work and 100% of the quality. For your case, you'd assemble a few thousand examples, retrieved KB chunks, user questions, your real production transcripts. We already have RCV3 chat logs where Sonnet and Fable answered well. That's gold, real question, real retrieval context, real good answers. Synthetic generation, have a strong teacher model. Yeah, there's going to be like two types of model. This is like reinforcement learning. What is it called? AI, I think AI reinforcement learning. There's two types of reinforcement learning from my studies that I have checked. There's RLHF. Okay. Reinforcement learning human feedback. Where the human, when GPT gives you like these two, like which one do you like, or Gemini, which one do you like more? And then the human chooses it, and then that gets kind of embedded into the training. And then there's the other one, which is like a group version. Oh, that was quick. I got lucky. I went on the exact page. No, not this one. Group relative policy optimization and proximal policy optimization. So I think this is proximal policy optimization. No, llama is the only best way. Okay. Oh, llama. Although you can have open web UI to have ChatGPT like interface for your local model. Of web UI to have chat. Okay, you mean like I can just make my own? Yeah, kind of like with Rocket Ship. Like yeah. But no, how would you run it though? I don't know, that's beyond me. Add Laura to your dictionary. Okay. I'll add Laura to my dictionary. But there's a problem. My dictionary's full. That was like a one-time study session that I did. I'll do another study session. I'll ask for terms. Let's just do Laura now. Hold on. What's Laura in the context of what we're talking about? Don't use too much jargon. It's like the new thing I say all the time is don't use jargon. Don't use too much jargon. It's a funny word I like to say, jargon. Laura, low rank adaptation, is a shortcut for fine tuning. Okay. Interesting. Instead of retraining the whole model, billions of numbers, needing huge GPUs, you freeze the original model and bolt on a small set of extra trainable numbers, the adapter, okay, that nudges its behavior. You only train that small add-on, which is maybe 1% of the model's size. You get most of the quality of full fine-tuning at a tiny fraction of the memory and cost. That's why a 7 billion model becomes trainable on your 16 GB card instead of data center. QLoRa is the same idea, plus compressing the frozen model to squeeze memory further. That's why you're so confident about me using my GPU. These little tactics actually make it possible. Even if I don't end up running my model on my own GPU, I can still build my model on my GPU and then maybe rent like a VPS or something that can handle it with more RAM or something. Exactly, yeah. No, this actually, Laura changes a lot. Because I think this is my understanding of it. It's kind of like how GitHub works. With GitHub, you have like a repository, but then when you make changes to it, you're not changing everything and backing everything up every time. Because you know that only some of it changed, you only make small changes and then you clone it. And then you save everything, but it's very minimal effort. This is the equivalent of that, from my understanding. Let me know if I'm right. This is the equivalent of that with AI models. So you have all these parameters, billions, and they all have their tuning. And then what you're doing is you're only adjusting some of the tuning and you're not retuning everything all the time. Always. Am I saying it correctly? Because if I am, then I get it. I don't think I read everything you said. I mean, you can have OpenAI. It will be like ChatGPT website using the local model running on your local hardware. Then anyone in your house using same Wi-Fi can use your local model on their device. Okay. Hmm. I don't know which direction I want to take Rocket Chimp. Because now Rocket Chimp, the advantage that it has is basically being crushed by, yeah, somewhat correct explanation, nice. It's somewhat being crushed by the MCP, and it's still useful, especially for somebody who isn't too deep into programming, doesn't want to do all this MCP stuff. Like somebody who's just getting into trading and they want to learn about strategies, Rocket Chimp is perfect. Somebody who doesn't know the technical terms, who just wants some definitions, who wants to try out for the first time coding some algorithms. It's perfect. You can tell it, Rocket Chimp, create this algorithm, it gives you the code. You can even drop reports into Rocket Chimp and automatically it parses through the spreadsheet and then generates like a chart for you. And then it's immediately accessible to basically the RAG, which is trained on interpreting. There's a literal tool, like a tool call. It's trained on interpreting that data that is visual. And so you can throw a report that has Sharpe ratio, profit factor, drawdown, minimal and maximal, and all this stuff doesn't mean anything to you. And then ask Rocket Chimp, what does this mean? Boom, you get the answer. So it's like an educational tool. But what I wanted when I first made Rocket Chimp was an actual assistant. Like, do this with me, create this algorithm with me. And then I realized it's just that's not the right play. Like it's better to use the MCP that MT5 gave you and then use something like Claude desktop app or the CLI if you have it, and then have it control directly the meta editor and modify the code and run all the backtests for you and those sorts of things. So yeah, in terms of product, I'm not sure exactly what direction I'll go, but I'll always work on it, try to make it better. It's like if you want to build more bicep instead of training whole body, you just train bicep. It's isolate. Yeah, like you isolate specific areas of the billions of parameters and only focus on those. Laura. This could be really interesting for other things as well, not necessarily coding. Very, very interesting stuff. Yeah, we went very far from arbitrage, but it was fun. I enjoy learning this. Also, you can check this Prime Intellect AI. Alright, let's check it. What is this? Own your intelligence. Wow. Yeah, I really like the aesthetic, I'm not gonna lie. Oh, 3D. This is a really nice website. Honestly, if this website had some rounding in the edges, like see this edge here, just a tiny bit of rounding, it would be the perfect website for my aesthetic, if that makes sense. Like I like this style. What is, I don't even know what this is. Sorry for sending so much stuff. No, it's fine. Keep spamming. You can actually ask Claude to explain it to you. Okay, that's smart. It does look like something a little complicated because I didn't get it immediately. That's the problem with the UI. Sometimes, like, if you don't get it immediately, it's an automatic fail. So this website, unfortunately, automatically failed in terms of marketing and stuff. The purpose needs to pop out immediately. If it doesn't matter how nice the website looks. I struggle with this, to be honest. Like, I'll make the website look super nice, but then nobody really knows what it's about. Like, I bet trees have nothing to do with anything. You got these little floating butterflies. It's so nice. Training, inference, compute, research. Is it like a VPS for AI? Like, you can run your models on it? Prime Intellect is basically the vendor for exactly what we're just discussing. It's an open source super intelligence stack. What? A platform. If you can totally learn it, really cool. Well, it's for nerds, to be honest. Yeah. No, I'm still gonna learn it because it's also not just for nerds, but for businessmen, entrepreneurs, cash money people. Especially in today's age, okay? Let's see. Their pitch is aimed at companies that want to stop renting frontier models, or that want to stop renting frontier models and own a custom one instead. 4 places. Actually, that is exactly what I would like to do. I would make so much more money. Compute, rent GPUs. Yeah, from a single card to full clusters. Yeah. This is the rent an A100 for a few dollars per run option I mentioned. Lab, post-training tooling. So basically, I can have my own model and have it retrain itself. Basically, make RocketChimp truly its own thing, RocketChimp. Inference, serving your finished model. So it's like it's the complete solution. Research. They open source their own work, intellect. 3, a 100 billion mixture of expert models, a 4 million example reasoning dataset, and then a agent project. Also ask Cloud follow-up. Also tell me about Prime Agent. Okay. Tell me about Prime Agent. Tell me about. I was Egyptian for a second there. For RocketChimp specifically, the relevant size is compute. Train the Q LO. What is Q LoRa? What's the difference between LoRa and LORA? The R is capital, LoRa, and Q LoRa. Quantized. Ah, you said this earlier. You said quantized, and then you said another word also. Okay. For prime agents, hold on, let me Skim this part. Okay, for prime agent is prime intellect's open source self-improving coding agent. Two core ideas. It runs on recursive language model, a persistent Python kernel where the model writes programs over its own context, letting sessions run arbitrarily along with the history stored in variables instead of bloating chat log. This is something I would need to actually study if I'm going to be able to explain it properly and understand it. Continual harness. Is this their attempt at like recursive self-improvement? Yeah, that's what's up. Those are the terms. Recursive self-improvement, which is technically only theoretical. This is their attempt at it. That's what this is. Headline 95.5% on ARC AGI 3. AGI, yeah, we're talking about the theoretical now. Yes, it's like a self-improvement harness. I'm about to head to a meeting. Bye, Javon. Thank you for coming. Good luck. Do your thing. We'll get rich. We'll make it. Connect with me when you can. All right, we'll do. Spam me with memes. I'll spam you with more memes. Go do your thing. Your meeting. Is the strongest harness right now. Strongest harness. All right, brother. Take care. I feel like doing this is yeah. Okay. QLoRa, quantize the frozen base model. It's first compressed down to 4-bit numbers, quantized, shrinking its memory, footprint roughly 4 times. The same 7 billion model now takes 464 GB. Okay. Oh, okay. I get it. Here's my understanding of it. So basically, quantize means like you're taking something, compressing it so much, like you're taking this image that is 1080p, that if it was 720, you would know exactly what it is. Like yes, the quality is significantly reduced, but from the perspective of just somebody who's looking at something, you know exactly what it is. You didn't really miss anything. And that's the conversion from 1080p to 720p is that quantization, we'll call it. Quantization. And so basically this is saying quantized LoRa is even more efficient than just LoRa because you apply this sort of compression, and then you get away with basically the same amount of tuning in terms of tokens. I think I'm right. I think makes sense. And it actually makes it feasible for me to use my GPU to make my own model. Yeah, this was a very big turn. Like we went from arbitrage to quantization, and now I'm thinking, how can all this can be combined? Always got to be like this creative. What if it can be used for trading? Kind of, yeah. What if this can be used for? So here's the thing: you can't do extrapolation. Like you can't predict the future, which is the problem. But here's something that I tried to do before, and maybe you can help me with this because basically you're a nerd, like you know all this stuff. You'll be a tech nerd in no time, yeah. Uh, what if we can take the genetic backtest, which takes a very long time. Like if you run a genetic backtest, always it'll take like 3-4 hours, even for a small test, but it will find the ultimate parameter set for whatever this algo is, and then you just rerun it constantly on the GPU, and you find the ultimate parameter, and then you have like adapting parameters based on the new tests that were done over the past week. I tried that. I'm gonna probably try that again. And using this quantization technique, I'm thinking it might actually work, but I do need to study it properly because I don't even know what I'm saying exactly. Kind of get like a sense of it. Yeah. All right, I think that's it for this stream. Spoke a lot. I'm beginning to feel my voice, which is when you know it's time to end. Thank you for all of the suggestions and for telling me about this, because you've given me something new to really pursue. That's pretty much it for today. We did go over a bunch of arbitrage strategies, different types of arbitrage. We talked about some of the ones that you should stay away from, and we talked about some of the ones that might be feasible and you can go for them. We skimmed over what's possible when it comes to using the light charts by TradingView, which is just open source code that anyone can now use to create their own little platform and do things that you otherwise wouldn't be able to do. And then we just got carried away really talking about AI and open source or open weight models and what you can run yourself with your own GPU. And I think later on, we're probably going to look into this to see how we can combine all those things, because why not? All of a sudden, these sorts of things become possible because of Claude, because of Fable, really, and all these large language models. So that's it for today. That's this video, and I hope you enjoyed it. Be the next one above it, yeah. You have all resources, yeah. All right, bye, take care. Thank you for watching the stream. I'll try to do this daily. Maybe one of the days I'll miss it, but I'm gonna try to do it daily. So thank you again for stopping by.